always think it's a phallic thing, Potter. You think I picked it on purpose? Alright, music down, music off. Why do you always think it's a phallic thing, Potter? You think I picked it on purpose?
Yeah, sound.
Alright, boys. Monday. So there was a lot of expectation that, potentially over the weekend you might get some sort of announcement that would help the pound and help the markets, but it became apparent that there's actually just more of a shitfest going on over in the UK. The Scottish people seemed like they wanted to perhaps block this and have another referendum. Looks like the Labour leader is going to get removed. A lot of the shadow ministers were resigning. And it just exactly how it was going to go through. Some of the leaders of the Leave campaign doesn't seem like they want to go as fast as the EU. And so it was always going to be a very dodgy opening. So you did see a couple of bouts of profit taking, a little bit of a short squeeze at the start of the European session. But given the overall bearish sentiment and the fact that nothing has been achieved and there's no one seems to be taking it seriously just yet from the central banks, the selling that we're seeing in the pound coming through now, it's likely to continue. Yeah, I mean, I don't even know what we could hear right now that would change this sentiment. So the target that we're first going to is the low that we got to on the actual Brexit day, and then below that you would think that 130 would just be a natural target. A lot of the crosses still have some major levels to hit, so we're looking at, say, euro pound easily can get to 85 and above, towards that 90 level that you got in the GFC. How the eurozone reacts in terms of what we see coming out of the eurozone from some of the other nations about having their own referendum really is going to dictate if that pair continues to rally. I think we're going to see the euro actually struggle as well. And if we get back and hold below 109, it's natural that the market would be looking back towards those 105, 106 levels as well. So everything looks like it's lined up here for another level of downside. The slow burn going on in the stock market, that's hard to stop. That's hard to stop in the current market mood. There's just no reason here while there's so much uncertainty. And the way the market likes to play usually is to just keep searching for that pain levels, keep searching for almost forcing the central banks to come together and do some sort of major stimulus, or forcing the BOE to do some sort of major stimulus. And while they're still working out, who's going to be leading the Liberal or Conservative Party over there, you're likely to see, I think, this continue. So I reckon we've got at least 1 or 2 weeks of pretty heavy selling coming. And so I've been talking to clients all day at work and just, basically, how do you want to play that? Which pairs usually get smashed in that sort of environment, apart from the pound? Well, usually it's going to be the commodity currencies. But what we've seen so far is that they haven't really been that willing to go lower. All right, this is actually, I mean, look, it's bearish on one point of view, but it's actually quite bullish on another view. All right, so I did come in thinking that today we're going to sell off with the stocks, and there would be quite some, the market will come to the realization that if we're not going higher, we're probably going lower, and then try to test the support in the commodity currencies. But it seems like for now, anyway, they're holding up. So my trade of the week really was selling Kiwi because it has the most room to move in terms of downside. Alright, so it has the most room to move here in terms of if the market flips from a long to a short, then all the longs have to get out, and then the actual maneuver down will be another 300 or 400 points, putting it towards 66 eventually. But at the moment, it seems to be still holding its uptrend. And what you're seeing is a lot of pound Kiwi selling and a lot of pound Aussie selling. Also, you're seeing a lot of euro Kiwi selling and euro pound selling. Euro Aussie selling. Now, while the market is still going lower with those two pairs, and while the dollar yen is providing a little bit of support for Aussie yen and Kiwi yen, perhaps this pair can hold itself. But if this stock market continues to roll over and continues to go down, then eventually these pairs will probably snap because they are risk pairs. Right? Once they actually break, I think the selling will be quite sharp to the downside because the market is still almost clinging with hope that this is going to be okay. And I just don't think it's going to be okay next couple of weeks. Right, so the usual way to find a bottom in the markets is to look for the point of most pain. Yeah, and then we still got a fair bit of distance to go there. So it wouldn't surprise me at all if this rolls down. Look, when I posted the idea, I put pretty crazy stop up there around about 71.70 in the room, targeting down 68.80. Price action so far today has been surprisingly strong. So I'm not giving up on it. I'm just surprised that we've rolled over. And I've been debating with a couple of other traders. It's like, well, is this a crisis or is this a shock? And I'm on the view that it's a crisis. It's a shock straight away, but it's going to morph into a crisis. And most of the other guys are suggesting, some of the other traders, the traders on the long side, are suggesting that this is more just a shock that's going to go away and not really impact the long-term uptrend. And because the Fed is on the sidelines now, that the Kiwi's going to actually outperform. All right, and that the stock market's actually going to hold the bottom, and we're actually going to start to rally again as the world doesn't fall apart. All right, so that's the other side of what we're talking about. Now, going forward in regards to how you're going to play, whether this is going to unfold or not, I'd say we suggest you look at the oil. All right, if oil rolls over, I think that's probably going to be the death nail here for the commodity currencies. And while you have oil under pressure, say with the stock market, that's a really bad combo, and that will get enough to break those key supports that's going on with the Aussie, the key supports going on with the Kiwi. And once we've broken those supports, less resistance. Yeah, I mean the market's just stubbornly buying at the moment.
Where are you?
Just live now. And so dollar yen's going to be critical as well to see if the market's too scared of the BOJ. And so the dollar yen holding its own is actually removing a essential part of where Aussie yen and Kiwi yen and the Aussie and the Kiwi get their selling from, because usually in a big crisis you'll see those two dramatically fall. All right, so they've been holding as well. So keep an eye on oil, keep an eye on dollar yen, keep an eye on the stock market, see if this evolves into something more negative. Perhaps we're waiting for the next shoe to drop, because I don't think the next shoe to drop is going to be a positive event in the market. I don't see how they can actually spin this into a good event. In terms of, the BOE is talking about big cuts coming out of, analysts are talking about big cuts coming out of the BOE. And, that may be providing short-term support, but exactly when they hold that and how that comes about, if they're going to hold like an emergency meeting, usually they will hold that when the market's really falling apart. Okay, so you really have to wait until that comes into the downside. All right, so that's not a bad thing, right? That's an opportunity to get long, but what you'll be waiting for is really capitulation in the market, in other markets. So capitulation in stock market, capitulation in Aussie, capitulation in Euro, and dollar yen. Really force the hand, and usually that's what the market does. All right, and I don't think that this can be ignored, and like I've said, pretty forcefully, I think this shock turns into a crisis. Yeah, but it's early days, right? This is day 2, and so you have to be flexible a little bit in how you go through, how you start to approach the market and be aggressively negative, right? I'm probably too negative given the price action on stock markets. They've actually, look, they did have a little bit of a sell-off just now, but let's not get ahead of ourselves and suggest that we're ultimately aggressively bearish. It was much worse, really, the selling in the GFC. It was much worse the selling in the China crisis. So this is actually, I mean, I'm getting more towards being neutral, right? Which is probably flexible as you want to be, but I'm favoring selling rallies rather than buying dips. I think the buying dips is where you're going to get caught rather than selling the rallies. So today, this 132.28 I think is the real low. It should get tested again. It's too close not to get tested, really. A break of that would really open the doors. That should lead to a little bit extra selling off in the stock market. And then we'll be watching if the dollar yen holds and then the oil holds. Right, so that's a game plan for me anyway as a trader. I'm short the Kiwi. Basically the only trade I have going at the moment. And I was short the DAX, but took a small loss on that when the market didn't opened up strong. So yeah, we're just a little bit on the sidelines, but still trying to see the market develop more negative. Then I think once the market starts to develop more negative, you can get a bit more aggressive in your shorting trades. Yeah, there's nothing to suggest here on the Aussie and the Kiwi that you should be aggressive just yet. The old correlations may be wrong, right? If the old correlations are wrong these days, then you could get caught short. All right, now what are people trading? A lot of pound yen guys out there. I mean, pound yen, look, it's fun, right? It moves to, 2 big figures in an hour. It has that aggressiveness that will get you those pips. It's looking very bearish, yeah. So the dip buying that everyone's doing and trying to participate in, I think you instead of waiting for, say, really nice levels, waiting for absurd levels, yeah. So from here, I wouldn't be touching it at the low. I'd be touching it maybe at 130, if you had to. Would be great if you can turn your brain to the other side, which is selling, and you would have got a lot more opportunities here in this market in the last 48 hours. Well, it's natural, Potter. People want to buy the dips, yeah. They just they think it will go back, and they think it's a really cheap level. It's not cheap; it's weak, right? That's the way to look at it in this particular case. Sometimes cheap is cheap. Aussie Kiwi 105 is cheap, yeah, and much more so than, say, weak. But even that hasn't worked out so much. Where's that Aussie Kiwi? You little bastard. Alright, Aussie Kiwi. So I bought a few times actually and had to chuck in the towel. So I've been buying around 104.60, but look how many times it's failed. Yeah, and it really is suggesting that this is not what you want to see, right? If you're looking to buy the bottom on a pair, which could turn out to be, you really want to see a sharper bounce. And there's no data this week at all, no economic data. There's a little bit of Chinese data on Thursday, I believe. So this is all going to be about how the Brexit flows through to the majors. I still like this pair actually if the Kiwi rolls over, because it's still net long in terms of positioning. So when the market flips on a net long position, it's much easier for all the crosses to get destroyed. And so I still like that. One way you might be able to see, actually, I talked about it briefly. If you see Euro Aussie and Euro Kiwi start to rally, that's the sign that they're breaking the back of the majors. At the moment, I'm not sure if I've got a Euro Aussie up. We can talk about gold too. Euro Aussie is so far holding, right? If not even falling. Right? This is not what usually happens when the stock market's getting smashed. So if we see this reverse and we see the Aussie start to fall apart, you really start to see that. Come through, and that's when you know to hop on the majors. Yeah, probably Aussie yen and Aussie Kiwi and Kiwi yen are getting smashed at the same time. So yeah, look for the Euro, sharp little rally here in the Euro Aussie and the Euro Kiwi, and that would be the sign that it's beginning, if it begins at all. Nick, we talked at the start that I thought that the best potential trade here was a short Kiwi, but I did go into a bit of depth saying that the price action is definitely not what you want to see so far. I mean, it easily could be 500 pips lower than it is right now, and it hasn't fallen. So that's a sign that the market maybe is in a different mood to reacting to the risk aversion, the uncertainty. I think eventually it gets dragged down with it, though, Nick. Yeah, this is a live video. You can ask a question there. GB Guimarães. Alright, so gold is a big favorite of all the traders, most retail traders. Definitely bullish. Yeah, this is as clear a bullish case as you can get. The uncertainty at the moment and the top side potential here after the breaks of 1300 really suggests that 1375 to 1450, that's a pretty decent and achievable target, and it will really do its own thing. It's not about US dollar weakness, it's about that safe haven demand. So it's probably as good as any safe haven, when the shit really hits the fan. And that's what I think will eventually happen here. So yeah, I'm buying dips. You probably won't get 1300. You might, or 1305 or something. But say there's some sort of relief news. I mean, the thing I really worry about overnight when I'm sleeping is some sort of second referendum building momentum. That sort of thing gives hope. And when there's hope, the pound could really do some wild sort of rallies from these levels, and that would really hurt gold. So at the moment, yeah, the gold is a indicator of how worried the market is about the outcomes here. And also it's getting support because all the central banks are looking to do more easing now. Pretty much everyone. Or the US just remaining on hold. Alright, so gold outlook is extremely bullish. The only thing that can make it even more bullish is if we've got inflation. So it's keep that trade idea in the back of your head. To buy gold if you get any sort of dip, I'd probably be looking at 13, 18. Yeah, achievable. The market's caught a little long today, given that there's no follow through just yet. I mean, it's all going to be dependent upon the US session and the US traders, if they're going to punch lower or not. Just selling a little bit more DAX there. Off screen. Alright, so that's how I view the general market at the moment. We'll just go have a look a little bit through, how the market's positioned. So if you haven't got any questions, if you've got a question, you add it through. Just going to read a little bit of research with the boys, see what the banks are suggesting. I mean, some of this stuff will be just random generalists. I did go through, there's around about 30 or 40 reports. So I did pick a few that looked interesting. Yeah, so basically this is talking about the UK politics at the moment. I'm extremely fragmented right now. That stuff that the Scotland's First Minister was saying. We're seeking immediate discussion with the EU to protect Scotland's place in the EU. I mean, that's crazy stuff, right? That's talking about having a referendum to get out. Shows the DAX chart. Well, the DAX is under pressure and it just bounced. Okay, so we'll go into a 5 minute. So we sold up here. And so after the market found a little bit of support, was just looking for the market to find that previous resistance, which was the open. This is the open today. Alright, so the market opened here. And see this little triple wicks that you can see there? that's that's enough for the bears to give up on that little attempt. Right, then the market had the little rally, little relief rally rolled over, and this selling was pretty relentless. The type of selling would suggest there's a lot more selling to come. Okay, and then so the market fell, found support at the open. What I mean by the open? The open of the futures market. The actual the contract type market. The actual like IG spread betting market actually went a lot lower than this. It went to down all the way down to under 9.3. So the ability for the market to fall a lot today is there. So just be a little careful thinking that we opened here, right? Because that's fine, but we had all this price action during the Asian session. Okay, so that's a bigger support to be targeting. And if you're a buyer, you sort of pull back and wait for that bigger support. If you weren't in a hurry, which I don't think anyone any serious trader is right now for these pairs. A little bit of action on the pound actually. We're coming up towards that previous low. Don't want to miss that. See if it bounces or holds. I mean, it bounces is constructive. Can lead to things. A clean break of it would probably roll over onto the stocks as well and to the euro. Okay, and maybe even start to drag down the Aussie and the Kiwi. Alright, so you'd expect the euro to be also falling at the same time, which it is. And you would expect the DAX to also be following a little bit, which it is sort of. Also finding a little bit of support on that upward make-believe trend line there that IG is drawing for me. Right, but the market's now a little too close not to test that, right? So we might see that in a second. How's the sound, Nick, on the mic, mate? Oh, beautiful. Monday SATA. First one. I do the 6 a.m. shift this week, so this is actually a little bit later. Feels a little later to me. But I do like getting home to do the open of the European session because I'm a natural DAX trader. So I don't mind to do that. Yeah, no, I stole it from the girls in the flat. There's a bit of a cooking situation going on out there. So dollar yen's rolling down, Aussie's rolling down nicely here, and you just suspect that Kiwi is as well. This is all very bearish. So probably the DAX is looking pretty nice here. Yeah, so that's up 50 points. Because DAX is like the pound yen, but of the indices. It moves aggressively and respects technical levels. And sort of it telegraphs its next move a little bit by the price action. So if you get used to the shenanigans that they play at this open of every day, it's not like one day they have a day off, right? It's every day they do the same games. It's probably like 10 or 15 games they can play. And you play it enough that you know sort of what the mood of other traders is. Because it regularly goes 300 points. Oh, pound yens I find a lot harder. Pound yen did some... Yeah. I find it a lot harder to I mean, look, it's the pound yen. You just got to go with the flow, right? You just got to go with the way the market wants to go, and it will go 1,000, 1,500 pips over medium term. Um, the predictability of when the DAX moves, which is in the first 2 hours of its trade, as in always it's going to move, just makes it a bit easier to prepare for. Whereas the pound yen, you always got to be watching. So it's like a less stress situation. Yeah. Maybe. Maybe, Nick. You would love the DAX, Joe Pro. If you love pound yen, you love the DAX. Right, so where are we? Back at the pound watching. Back at the pound watching. It's trying to survive here. Futile, probably. Suspect that the next 5-minute candle will be sold. I mean, imagine if you're like you're long and you're like, oh, please don't test it, please hold. You know, that's the sort of view. You got to sometimes view the market as the mentality of the traders who are each way. The shorts are being very patient, waiting to see what happens. The longs are freaking out. All right, they're just, what's going on here? You know, how much further is going to fall? You can almost feel the fear in the longs. They bowed out so early this morning. We'll come back and have a look at it anyway. Back to the research. So yeah, there's a petition going around for the second referendum. 3 million signatures. That's another news that's going through. I mean, 1 million is huge. 3 million is massive. Like, it's just, they have to respond to that. A lot of commentators say they just can't have a second referendum. The way I see it coming down to, I see the both the leaders getting kicked out. So Labour and the Conservatives, both their leaders get kicked out, and then it goes into the 2 new leaders. One of the new leaders might suggest that they will go to election on staying in the EU and renegotiating. And then, you know, say that's the Labour team. Say the Conservatives then led by, say, Boris Johnson, you know, want to push us through that Article 50. There's still 2 years until that Article 50 has to be finished. So in that time, I mean, what you can have is a new election where you can have the, you know, the other government trying to remain. Yeah, and I think that you probably end up with some sort of compromise situation from the EU as well. I don't think they want, you know, the UK out. And I think if the situation gets bad enough in the UK, that sentiment would switch aggressively towards remain. You can't just leave the empire. You're going to get punished for that, Potter. Going up against the New World Order, Potter. What do you think's going to happen? They're going to make an example out of the UK. So rating agencies immediately lowered the UK's rating from stable to negative. That's not nothing. And we've got a little calendar here. Would be really interesting to see Draghi's response as well. But there's a EU Leaders Summit coming up this weekend. You know, we're going to see the tone coming from the Eurozone from that. Alright, what's Citibank reckon? Euro pound won't perform. That's common because the euro will get dragged down at some point. How the BOJ goes about trying to reverse this is, I mean, they can't really push against string, right? They're already doing so much. They're already nuclear level. It's not like, you remember what happened last time they increased their QE? It lasted 2 hours, the rally. I mean, we are at 100 now rather than 120, but still, to expect that the BOJ can control this, you might need some ridiculous intervention, from 100 all the way to 110, just to really wipe out the shorts. Make them think again before doing it. So they did talk about it in the I think it was a G7, might have been a G8 or G20, about the situation when Japan's allowed to intervene. I mean, they have reserved the fact that they can do it at any point. You've heard that coming out of the BOJ. BOJ talks all day anyway. You hear it all the time coming across Reuters. But exactly when they would do it, I think would have to be below 100. And I'm not sure how aggressive they would be. In reality, when I was talking about them punching from 100 to 110, that's just not going to happen. Alright, Eurozone contagion. Eurozone banks. Yeah, so a lot of guys are watching Eurozone banks. I was looking at the Deutsche Bank today. Very weak. Yeah, so if that was to continue, that can become sort of like a crisis. There was a bit of a Eurozone banking crisis earlier on that you guys maybe didn't see because it wasn't in the headlines as much. And that was with Deutsche Bank getting smashed because they just basically said they cannot make money at zero interest rates. And that's been a bit of a concern here for the European banks. The yields are just so low that there's no interest there to be made. They really want them to lend, but the bank doesn't want to take the risk on of lending at 2%, 3%. There's just nothing there for them. Little pound check. Okay, there's a little bit of a bigger bounce than usual. Let's see what next one. Don't think you survive the year long, so I don't think you survive. Yeah, so there has been a lot of talk about, or some of the other reports I've been reading, it's like, what is the fair value for the pound? Where are we going? I mean, obviously, say we break 130. I think it's starting to get pretty cheap, right? I don't know what the all-time levels are. Potter might know. But, we're already at like 30-year lows. So, below 130, maybe 125, 120, absolute bottoms. You never want to say absolutes, right? Because it could be wrecked for ages as the US is raising its rates. Yeah, negative rates, maybe, Joe Pro. That's aggressive. That's. I don't think that's on the table just yet. Next big thing is who's going to be the new leader of the UK, and when's that new leader going to trigger Article 50? Because it has to be triggered by the UK. The longer they delay, the more chance I think of something sneaky happening, Potter. Like that second referendum or general election on the actual vote. It's a non-binding on referendum, yeah. And the leader who called it, he resigned, so it's not his word that it's being broken. It's the next guy's, right? S&B, yeah. S&B is similar to the BOJ in terms of risks just talking too much. But they always look to be buying the Euro Swiss. So if we get Euro Swiss back towards, say, 105, that becomes a really compelling risk reward for me. 105. Anything below 105, really good. As long as it's not some sort of Spain or no, France is having a big. I think France is the one which they're afraid of with Marie Le Pen. Okay, so now they've gone to Aussie and the Kiwi. I actually haven't read this, so this will be interesting. See if they're on the same track as me, thinking it's going to roll over eventually. I mean, CAD's the most vulnerable because the oil is looking very dicey. So CAD's the most vulnerable just fundamentally, but the New Zealand positionally has the most, and sentiment wise has the most turn in it, the most room to move. Oh, these guys looking to buy. Once the dust settles, the recent price action may simply serve to make AED and New Zealand more attractive on a valuation basis. Yeah, we are going to be Aussie. Is going to be one of the last countries with that AAA. If the UK loses it. Alright, so yeah, not a bad little report there from City today. The Danske Bank one was a little bit trash. Little pound check. What do you guys reckon? Pound's gonna survive the next hour? I bet against it surviving an hour. The low. Wish we could do little polls, Nick. That's a very easy, like, sort of app to put in. It's having a go, isn't it? Little battler. Trying to survive. Yeah, so at the moment, I suppose a lot of traders out there don't have that strong conviction view. Maybe they're just developing their view as to how we're going to play the stock markets. Look, it's a little dangerous, right, to sell now expecting contagion to pick up. Probably be best to wait. I mean, stocks are not cheap. Stocks are coming, 3 or 4% away from all-time highs in the US. The chances of significant bear market starting anytime was real before this, right? Before we had this crisis or this shock. The chances now of this shock turning into a crisis that could turn that bear market, which so many permy bears have been waiting for, is extremely real. It would be something along the lines of, we've got a systemic problem in Europe, and the market no longer believes central banks can provide support to the market, and that just the ask gives way. When we're down at say 15-20%, maybe the US does another QE or something drastic, and everyone expects that to be the savior, and it just doesn't work this time. Similar to say BOJ, and then you get the bear market that a lot of people expected to happen as the global economy sort of stalled. So don't think that we can't fall dramatically from here. We can. This guy's talking more about the stocks, a little bit outside the scope of this. Turn off the camera. Excellent. When the camera's off. Alright, so there's been a lot of sort of moves in the last little bit in the bond markets as well. Surging, basically. A lot of money into the bonds. A lot of expectation now the US is not going to be raising rates this year. See this little line here? That would be extremely bullish for the whole market. Apparently, the German Finance Minister suggested offering the UK Privilege Association with the EM, keeping trade barriers low. Yeah, but calming the situation really is how it calms down, and what calms it down would determine how big a bounce we get, and also what the contagion risks are. You know, let's see the appetite for referendum in the Eurozone. And also, I mean, China's stuff, right, hasn't been great lately. Don't forget about China. Yeah, good. Morgan Stanley's on my side. Just looking at the Aussie here. Looking to sell Aussie. I mean, that you can't be selling Aussie without being selling Kiwi. So not exactly the same, but fairly similar. The trade of the week. Something Potter probably was talking about in the inside the room just a little while ago. Selling dollar yen at 103, targeting 95. That is aggressive. Yeah, the chances of intervention from the central bank. It does get slippery below 100, that's for sure, but the central bank probably will step in. Yeah, the Germans have to lead the market out of this, Potter. Yeah, I don't think I'm ever... I mean, look, I've been wrong on dollar yen before. It is a little bit of a rascal. It is just a crazy call. I mean, look, I'm buying at 99 again no matter what. I bought a little bit at 99 on that last little dip. But I'll be buying at 99 and just have a stop. Don't have a stop, sorry. Don't have a stop on a day like that. I mean, that sort of thing will probably be from some sort of contagion risk. So yeah, just don't have a stop if you're buying. Look at that, giving you advice like that. That sounds dangerous, doesn't it? Yeah, but don't have a stop below... if you're buying that sort of spiky action when it's just collapsing. Yeah. I mean, if it falls further, like just... if it even goes anywhere near 95, just get your credit card out, right? Because that's just crazy stuff. And then you can come find me when it's at 78 again. Alright, break my legs. Oh, dollar yen, you've cost me some money in the past. I mean, look, those sort of trades are you trying to get out within the hour. If you're going against them, you're hoping for a sharp bounce. You don't want to stick around for the next wave of selling. Because the intervention is probably going to be stabilization intervention. And that's not exactly... that's not exactly sustainable. Yeah, you can go across to the pound yen anytime you're looking at dollar yen. You get more pips out of it. Yeah, so that basic view is that the BOJ is going to intervene and slow it down rather than stop it. Yeah, but I think that's crazy. The market would be very emotional, irrational when the market's moving really quickly. And then anyone selling down below 99 needs their head checked. You could be stuck in that trade forever. I'm saying you should put a mortgage out and buy at 95. Trade Wizard. Just on that day, the first time it goes there, right? If it's one of them days where it's fallen from 98 to 95. The calendar this week, you don't have to check. It's just rubbish. Just double check when the Chinese data's coming out. So the first day of each month, you get the manufacturing official ones, and you get the Caxon, which is the non-official. If that slips below 50 again, then you play it via selling Aussie. That's the way to play it. Japanese data, just ignore it. Doesn't really matter. It never affects it. You might get 20 pips out of it if it's a shocking piece of data, but that's about it. So this leads into the week after, which is going to be just massive. Yeah, so the week after has got the RBA, and you've got the NFP, which is on the back of that really weak NFP. So obviously we'll look forward to that at the end of this week. We'll start to talk about it. We've also got the Australian election this weekend. So the Aussie will be in play. And you've got the obviously any sort of weekend, you've got the risk there of commentary or action by central banks. If the market's weaker, really weak into Friday close, that's when you get worried there could be something over the weekend. Oh, just trash. Alright, well that'd probably do for today. I might come back in later. Hey, how's that poll going? Alright, how's that poll going? Did anyone even reply to that poll? Are we going to get below 132.30 this hour? It looks like it's about to happen now. Very unlikely we survive. Next 20-30 pips. And I suspect it won't hold. But the most bullish thing that you'll get here is actually a break of it to 132, then a snap back above it. That would be the most bullish reaction. But yeah, more pips suggesting below 130 by the end of the US session is definitely possible. Test of 130. I just hope I'm asleep because I know that my brain will probably think about buying 130. Alright guys. I might just turn the mic off and I'll come back in a sec, yeah? And we'll check in on it. Yeah, quite a bullish bounce off the bottom there. Alright, so that's pretty much what the market wanted to do there now. Little break lower, little new low, and then big sharp bounce. So that's interesting. Less appetite to sell than I suspected. Alright, boys, I'll be back tomorrow. Good luck with everyone trading. Be safe.